Hey everybody, welcome to the first episode of About the Green. We're lucky enough to have Matt Wood here from Crediflex along for the ride to run us through this episode, which we're going to be breaking down financial advisors and how they really benefit business owners and other professionals in the industry. To see how their golf game is. So thanks very much for coming, Matt. I really appreciate it. So we talked about Crediflex. Maybe you could give us an understanding of your background and sort of what is a financial advisor and what's Crediflex?
No worries. So Crediflex is a commercial finance brokerage, and we specialise in asset finance. So that's when I say asset finance, I mean finance for machinery, equipment, vehicles, all those sorts of things. All basically in a business capacity. So we're only dealing with business owners to find finance for them. And the reason we do that is A, they might not have the time to delve into the finance side of things. B, they might not have the knowledge, or a combination of those things. Now, we often find that business owners don't have the knowledge, and they may just approach their standard bank that they've banked with their whole life, and that's not always the best deal or the best structure for lending for that business. So as financial advisors and brokers, we're there to help them out and try and find the right option.
Cool. Yeah, definitely a need for it. Especially, I can see it firsthand, the need for that financial literacy when it comes to business owners and just sort of taking that next step, or maybe in growth phase, really any phase of the business.
Yeah.
How would you say that, because there's obviously a lot of other finance professionals that could potentially work in tandem with you, things like people like accountants,
Yep.
Bank relationship managers.
Yep.
How do you sort of differentiate yourself from them? Is that something you feel you might do a little bit better at, or do you complement each other?
Well, I think specifically in the asset finance sector, I think we do it better than other people. I feel accountants, they've got obviously the knowledge. They do come across this stuff fairly regularly, but they're an accountant, not a financial advisor in terms of asset finance. So I'm certainly big on leaving mortgages for mortgage advisors, leaving accountancy work for accountants, and asset finance work for us. But we do certainly work in tandem. I mean, I've got accountants that refer me asset finance and ask my advice on certain finance agreements. I had an accountant the other day that sent me an agreement for one of their clients and said, "Hey, what does this look like to you? What are the rates like? Is this good? Is this a good deal?" And so I was able to advise that accountant and that client,
Cool.
whether that was any good or not.
Yeah, that's really good. It's pretty important to have every sort of avenue then, right? Every sort of finance professional.
and with mortgage advisors, I mean, they come across asset finance as well, and some of them try to do it themselves, but a lot don't. And I'm very much a stick to your knitting type of person. So I think do what you do best and do it well.
Cool. Yeah, cool, mate. Well, we've got first tee, so we'll jump up there.
Okay, cool.
All right, it was a good start, mate. Birdie from you on the first,
Uh-huh.
par on the second.
Yeah.
Both greens hit. It was like a 260-meter drive too.
Yeah, I mean, that's a
wicked.
good start from me. If I had some randoms playing with me now, I'd be like, who is this guy?
Yeah, who's this two handicapper?
Yeah.
If not better. That was fantastic.
If I can keep going.
Yeah, we were talking about before, I think because the microphones had turned off, just about your background, banking, 7 years with Crediflex.
Yep.
Enjoying it, self-employed.
Yep.
You're a fisherman.
I love it.
Love fishing.
Love my fishing. Yeah. I don't get to do it as much as I'd like though, because I've got 3 young kids. But I try to get out there when I can, which is not that often these days.
Well, what's it like being self-employed? Obviously hunting for your own business all the time.
Yep.
To try to help business owners, but also then looking after 3 kids. Like a lot of people would have to deal with those sorts of responsibilities at the same time as working.
Yeah, it's not easy. Like I've got 3 young kids under 5, and it's not easy. But for me, I have the flexibility to be able to help with the kids, do the things that I need to do with the kids, whether that's drop-offs or pickups, and I can certainly manage my work around around the family, which was really nice. But then I've still got to be cognizant of making sure business is coming in. And to an extent, there was a little bit of a snowball. I think once you've been in it for a while, business starts finding its way to you without having to do too much. As long as I guess people are good at what they do, or
did you find that you
or don't piss people off?
Yeah, exactly. We'll be good at your job, right? And then your word of mouth comes through.
Yeah. And so now having done this for 7 years, I've got repeat clients that hey, I need a new truck, hey, I need a new digger, hey, I need a new vehicle, hey, so it sort of keeps coming back, my good clients. So
lots of repeat business with the same business owners.
Yep, definitely. If they're big enough to have a recurrent need for asset finance, then those are perfect clients, really.
So you were saying, you've been with Crediflex for 7 years.
You're coming up, yep.
How's the space changed? In regards to sort of, I don't know, appetite in the lending industry?
I don't know. There's always appetite from the finance companies and the banks. It's just how much what they're willing to do. So, for instance, forestry's had a pretty hard time over the last couple of years, and so some lenders pulled out of forestry.
So when you say forestry, do you mean like any company that's working in
mainly
transportation in the forestry, logging?
Forestry, logging, and like forestry machinery that's in the forest cutting down logs. Cutting down trees. I don't do a lot of that because I'm in Auckland.
Yes. Where's that based mainly?
Or in
like Gisborne,
all rural New Zealand. Northland and all central North Island. Yeah, but legislation changes.
With the triple CFA
stuff. Which, not that we do a lot of triple CFA stuff. And then what was the other thing I was going to say? Just lenders. Like certainly recently, Bank of Queensland got bought out by UDC. And so Bank of Queensland was a lender that we've been using for the last 20 years as Crediflex. And then UDC decided not to have a broker relationship.
Fantastic. So just what you want.
Just what we wanted. So there has been changes. But the lenders that we do have, and there are a lot of them, as long as they keep putting their best foot forward, then they keep getting business. And
compromising,
as long as you don't have to be the lowest on rate if you're really good at service. Or really good at appetite. But if your appetite's terrible and your service is terrible, then you're going to have to be pretty good on rate to get some deals.
Makes sense. So as a business owner, if I was to come to you, where would a business owner get tripped up in, let's say, a new purchase of a new asset? What are they looking for? You said this space hasn't changed a huge amount, so it must be pretty standard, like in regards to credit scores or profitability over the last few years.
I mean, a simpler transaction is always going to have clear credit.
What would be a good minimum credit score? Sorry to interrupt you.
Well, I think there's 3 different credit agencies, and they all do it slightly differently. But the one we use is Equifax. And a good business score, a passable business score, I should say, is usually anything over 500.
Cool. Right in the middle.
And we'll typically see businesses in the 400s, 500s, 600s, and 700s.
So I want to touch on that as well, because a lot of people don't understand credit score and how it works. You say, you've got a 500 credit score, and most business owners go, what does that mean? Right? So credit score generally between 0 and 1,000. It's all based on if you've had repayments, everything going through fine, there's no dishonors with the repayments and something, an asset purchase that you've got. Would a mortgage, like a consumer loan, come into that as well for the business, or is it just direct for the business transactions?
When we're assessing a business for new lending, it's what the business can afford. It's that particular, or it's what that particular entity, and that might be a sole trader, it might be a trust, it might be a limited company.
Yes.
And typically for us, it's a limited company.
Yes.
And it's just what debts has that business got, and can it afford those current debts, and then also the new lending that they're looking for. Business credit score comes into it, and the director credit score comes into it as well. It's both of them, because the director is going to be guaranteeing that loan.
And it's important to know what the director's doing, because they can have liquidations of past companies, which you need to be aware of as well, right?
Yep.
That gives an understanding, well, if they've had a liquidation, it might not necessarily be their specific fault or direct
correct,
fault.
But you know that
you need to know that.
Yeah, we need to know that, and that is an increased risk to the lender. And so a lot of lenders will basically say, if you've had a liquidation in the past, we don't want to deal with you.
Yeah.
And that makes it very hard. But we've got some lenders that still will work with people that have been in liquidation. They wouldn't be recent liquidations. They have to be probably 5 years plus ago, or maybe even 10 years plus ago. And there's going to have to be mitigants for why that lender should lend that money for whatever it is they're purchasing.
I mean, there's a perfect segue into why a financial advisor like yourself is so important, because if somebody was to go to a bank with average credit score, looking for an asset purchase,
bank will just go like, nah, see you later.
Not interested.
And then they're like, oh, where do we go now?
Yeah.
And so if they work with a broker from the start, then we can place them. We know which lenders are the best, before we've even put an application, and we know which ones are going to suit them the most.
Yep.
And the other thing I think is important as well is that, when we do a credit check as a broker, we're doing it once, and we can use that one credit check to go to and send that to, when we send an application to a lender, we can send that credit check to whatever lender we send the application to.
Yes.
Whereas if a guy does it individually, he goes to ASB, gets declined, and they do a credit check, and then he goes to Oxford Finance, they do a credit check, then he goes to somewhere else, they do a credit check. Yeah. And so 3 credit checks in a short space of time is going to lower that score,
quite
that credit score. And so that doesn't happen when you use a broker, because we just do the one.
Yeah.
And use that.
And I'll touch on, we can't give any advice around credit scores because nobody understands them very well. You don't really know how the point system drops, but it can be significant. Normally 10 points or so, which you notice is like for a credit check.
I'm not sure, but I do know that I previously done some reading on the Equifax website, and I know that if you have multiple in a short space of time, it can dent your credit score a bit.
That makes sense.